Hey everybody, welcome back to Complete Trader Academy's daily review. Today is February 13, Monday, 2023. All right, let's hop right into it here. So we have this large daily candle here. And as we were mentioning yesterday, so price opened up at the new week, came down, and then came back up, see this big wick that we were talking about on Friday. Please watch previous videos so it makes sense. We broke down this wick right here at the open at the 50% level and at the top, and we had that high sitting there as well. Remember, it did not take out that high initially on that day of Thursday of last week, and then today we finally did. So let's go into a smaller time frame here. We go to a 1 hour first, and as you'll see here, I'm going to just zoom out just for a second. So you can see here, look at the order flow. So higher high, higher low. And it's not like I teach 100% structure, but you do have to have the basic idea of it, right? In your trading. I mean, I would believe more in liquidity than anything, but same time, the market maker built the algorithm to, let you get into liquidity and get taken out of liquidity through, the eyes of structure, because we have eyes and we take a look at the chart, and that's how we're going to get some idea of where we put our trades in, right? So it would make logical sense. But so we had higher high, higher low. This is the higher high right here. So when this pulled back here, you could say this is the higher low, but where did this high come from? This high comes from right here, not from right here. Why? Because when it made this higher low and it did not break this structure, so that's not the range. This from here to here is the range, right? So you got to be aware of that, and all this will make sense. Yeah, as we're consolidating now, right? But at the same time, there is a tricky order flow because look what they do. So, and that's why you'll see points like that not reached all the way. You see how it didn't tap it all the way in, and you see how it didn't tap it in right here. Well, that's part of their little trickery. So higher high, and then so follow the order flow. Comes down, bounces up, comes down, comes up, comes down. Doesn't take out that low. So that technically now this is the higher low, right? Because it didn't break again here. So again, higher high, higher low, higher high, higher low, and now we're here. So a couple things can happen here, which I'll go to that at the end here. I'll try to make sure that I don't forget, but let me go into the trade itself first. So take a look. This is the 5 minute. This was yesterday, not yesterday, I'm sorry, Monday. So obviously we had a break up above that high. This was your order flow breaking up structure. This was another one, another break right there. Did I delete that? Oh, it's too late. That's okay. Here. So yeah, so you see that break right there, that line right there. So that's to show you also the flow, but then you also had this break. So the price opens up. This is the new week, right? So obviously that gap is always important, and you want to see where's price trading versus the open of the new week, right? So if it's above the new week open price, that means that candle's bullish on the weekly, right? And then in general, you will, if you're underneath, then you're trading below that open, and it's a bearish candle on the weekly, and you don't need to go on the weekly to see that. You can know that just from right here. Anyway, so price came down, took out some lows, held structure from here, and you see it coming up. All right, didn't take out that high yet, right? And then price comes down. Now it's 540, got into here, into this imbalance. If you drag it out here, this will hold as somewhat support, okay? And then price will break above this high right here. So this is internal higher high, higher low structure, right? For order flow, more on the lower time frame, obviously. Breaks up, comes back down. Now the time is 8:50. Okay, comes right into this. If you take a look here, try to make this easy. Got this fib level right here. See this line right here? These thin lines, I made them thin. So from point A to point B, and then retraces back to the 70 right here. You see that? So I draw that blue line all the way across. So now that it hit that, I could have been a buyer here, okay, but that might not be your risk tolerance, and it might not be your rules. So if you want to play more conservative, you can wait for more order flow, which is what this trade is here. Price rallied up, broke above, nice strong candles, price retraces back, and you have to actually see it on a 1 minute. So I'm going to do that real quick here. So this is the 1 minute. So you could have been a buyer right here. You could have been a buyer right here. You could have been a buyer right there with that candle. It's retracing, order flow coming back in. You see how this pops up, comes back in right into this above candle, above right now, this bearish candle, right into that block, holds order flow, comes back in, comes. You could have been a buyer here. You could have been a buyer, well, technically even here, but you know, could have been a buyer here, here. As you can see it, my whole goal is to train your eye, and you can see that order flow. So, and pretty smooth, right? And then where are you taking it? Well, I'm gonna go back to a 5 minute. And then we have this fib right here, this 50 projection. This is point A, point B. So you're measuring the retracement backwards. So point A, so the low, which is point A, to the previous high, that retracement, you're measuring it that way, and you use a projection of every 50, every standard deviation, 1. This is 2 standard deviations. This is 3. This is 4. So obviously this is the half mark of that standard deviation, which is basically from 100 to 0. That's 1 standard deviation right there. You see that? So just as like this, just like over here, this is the negative 27 fib, and this is the negative 67. Well, right here is just 50s. They go by multiples of 50s, and as you see here, hit it very beautiful. This this level right here, this standard 3.5 deviations right here. See that? Comes beautifully, and as a projection, right? But remember, we had these lines here, these big lines on the 50 level. I'm sorry, at the wick. Remember, we were measuring the open, the center, which is equilibrium of that wick, and then the high, and we finally hit that high. Well, here are the levels. You saw it come up, reach that level, blew through that level, and then it was not about to take that high out, and then it retraced hard. People thought maybe selling, and then it finally came and purged that high and finally took out that daily previous high that is right here. So the bulls, it's still obviously in the picture. As you see, it's kind of winding down a little bit. You see how the lows coming down a little bit, and then it starts to make highs. So well, I see like a little speaker, or you know, a little shakeout, more expanding on the upside. So we've now taken out this. Okay, I'm gonna take this out. Take this out. Now this could happen a couple of ways, obviously. So because tomorrow we got CPI news at 8:30, and I'm assuming that they're gonna use that to finally. You see how I got this question mark here? It's been here for weeks. Well, that might be the next target finally, and then this would be the next target here, and then this would be the next target here if it's going to continue to go bullish. But what I think is going to happen is it's going to come right above this high, it's going to hit this high, and then it's going to come down as far as going bearish. So, or we also, if we don't go that high and we start breaking down from here, well, we obviously have this imbalance in price right here from the previous Friday close till till now, right? So between now and here, you got all this imbalance in price. So we expect price to come back down. Does it do it first, or does it do it from the news tomorrow? I'm assuming the news is gonna push it up, couple pokes above, and then maybe coming down to finish this imbalance, and then finally price will start kind of coming down, attacking now these lows. We have these perfect clean lows that liquidity is sitting there and it did not take out. So that would be my next target for sure, which is right there, that one. So all right, I hope this helps. And let's see here, is there anything else? Make sure I don't forget. Sometimes it's kind of hard to remember everything I want to say or was gonna say, or all that. But yeah, I mean, this is pretty clean. I mean, it's very clear how this market moves if you take a look and really see how the manipulation works, right? So yeah, so let me see. If I go to a 1 hour, I think that's pretty much it. I mean, again, you got all this imbalance of price right there. I mean, you can't miss that, right? So once it touches back here, the price will be more balanced. So it might get tricky. You know, you see how the price came all the way down and came all the way back up, even higher. So we're in a consolidation and we're ping ponging for sure. I mean, look at this. It's going sideways. Even if I go back to the daily, I mean, look at the price. You know, you had flow here, you had flow over here, but now you're starting to look like these pockets. See these pockets here? This is pretty big though. See this? But it's still stuck in this range. I think it's gonna bust out to the downside. Some people call this a symmetrical triangle, you know, not triangle, symmetrical diamond, you know, and you know, right now the bulls are still in the lead, but I mean, taking out that high for CPI news tomorrow, taking out that, I mean, this I can see happening now, but I mean, at the end of the day, I guess they could just push it up one more time. But I mean, honestly, I really think they're just gonna tap above, get into this wick at the best, and then finally make its way down, kind of like this, or you know, some order flow, like, you know, even this or shit this or whatever, right? Some bearish order flow to start. I mean, because again, remember this year we have the whole, you know, we have the rates are still going up, and they're in trouble. The feds are still trying to knock that balance sheet down. I mean, you know, it's like, I don't see how people would be, the prices of these stocks would be going up unless they pump more money in. I just, you know, it's a long story. But anyways, yeah, so check out the dollar versus that, and that will help you with your macro analysis as well. So, all right. So you guys take care. God bless.